Welcome to the 98th episode of Kanga Crypto News, your weekly briefing for crisp, dependable updates from the crypto world. I am Kuba, here to bring you the latest developments and the stories that matter most. Before we start, a quick note: everything you hear on Kanga Crypto News is researched and prepared by expert Kanga analysts using reliable sources only, but this is not an investment advice. We release new episodes every Friday. To stay on top of the most important moves in crypto, subscribe to the channel, tap the notification bell so you never miss an important update. And now, let's get into it. Let's start with the big shift this week. Institutional money is flowing back into crypto ETFs. On March 2nd and 3rd, Bitcoin spot ETFs recorded roughly $458 million in net inflows. BlackRock's IBIT led the charge with around 263, followed by additional flows into products from Fidelity and other issuers. Across the broader market, total crypto ETF inflows reached approximately $520 million in a single day, including Bitcoin, Ethereum, Solana, and Ripple products. ETF flows are currently one of the clearest real-time signals of institutional demand. When hundreds of millions of dollars move in within 48 hours, it reflects allocation decisions, not just retail enthusiasm. Now, let's look at how the rest of the market responded. Ethereum also benefited from the capital rotation. On March 2nd, Ethereum spot ETFs recorded around $38 million in net inflows. At the same time, Ethereum gained roughly 8.5% during the rally phase of the week. While Bitcoin remains the primary institutional entry point, steady ETF demand for Ethereum suggests portfolio diversification rather than single asset exposure. Ethereum breaking the $2,000 zone multiple times shows that institutions are not ignoring large caps beyond Bitcoin. XRP quietly saw fresh institutional interest as well. Reports indicate around $6 to $7 million in daily ETF inflows in early March and approximately $58 million in total inflows across February despite broader volatility. During the rally window, XRP rose close to 5% compared to Bitcoin volumes. These numbers are smaller, but for XRP products, sustained positive flows signal growing structural acceptance in regulated markets. But rally did not move in a straight line. After approaching the 69 to 70k range, Bitcoin slipped back towards 67 as cautious sentiment returned. Ethereum broke the $2,000 line multiple times but went back under it. Part of the mood shift was linked to broader macro positioning and risk appetite ahead of major US tech earnings, including Nvidia. Crypto continues to trade as a high beta risk asset in short-term windows. This shows something important. ETF inflows can spark momentum, but price still reacts to macro liquidity and global risk signals. Now, over to the narrative side. Bitcoin developer and early architect Adam Back commented this week that volatility remains typical even as institutional access expands. His broader point is simple: cycles still cycle. Even with ETFs, custody integration, and deeper liquidity, Bitcoin continues to move in waves, driven by macro conditions and investor psychology. That perspective tempers expectations of smooth, straight-line growth. Overall, this week was about capital rotation. Bitcoin ETFs absorbed roughly $458 million in just 2 days. Bitcoin broke 70k, Ethereum and XRP followed. The short-term mood, cautious but responsive to inflows. Long-term trend, institutional rails are firmly embedded and capital can scale in quickly when sentiment flips. That's today's Kanga Crypto News. If you enjoyed this episode, like, share, and subscribe. Stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.